Hello, ladies and gentlemen. Welcome to my channel. My name is George Kingori, your online finance guy who talks about all things finance. I can be able to save, invest, and grow in your financial affairs. And today I'm going to speak about the current market crash. So, my portfolio is losing value significantly faster than other periods. So, I can be able to show with this ETF particularly. So, just a few months ago, I was averaging 62, 63, and now I'm averaging as low as 49, 48, 49. So my portfolio has lost value by up to 10 euros for this particular ETF. And so what is usually my strategy? So for my portfolio, I'm always buying and selling and buying and selling. There are people who will tell you to buy and hold for a longer period of time, but that is not my strategy. My strategy is to buy when they are cheap, sell when they are expensive, and buy the next cheaper stock or ETF so that I can be able to ride the wave as it goes up and down and as I make my spread. I make my money by spreads, not by long term capital gains. If that is your idea of making money, it's still fine because overall the stock market goes up over time at an average of at least 10% for the next 10 years. So even if your portfolio is doing bad and you don't sell, eventually it will go up. But for me, I buy and sell and buy and sell. For example, if theoretically I wanted to buy shares, I would buy these shares at this rate of 31 euros after Corona had hit. And my portfolio will grow in value and grow in value and grow in value. And I would theoretically sell at 63 euros per ETF. And I would make 100% gain within a period of 2 years. So that is theoretically. If I were to sell at a shorter period of time, say I would sell in a year's time, I would sell the 31 euro ETF at 51, thereabout, and would be able to make around 60% return on investment. So I buy and sell and buy and sell. At what point do I buy? I buy when my portfolio in that ETF has gone down by 10%. If it goes down below 10%, I buy. When my value goes up by more than 10%, I sell. So when it is too volatile, I adjust the rate to 15% or 16%, and I buy when it goes below 16%, and I sell when it goes above 16%. And I'm able to assure myself of a spread of plus or minus 10 plus 10, so around even 20% sometimes within a year. And that is how I make good returns on the stock market. So at this time when the market is crashing, is when I buy. And I buy the ETF or the share that has lost the most values. This is because ETFs and shares are affected in different ways. At this time, when people are facing high inflation, when there's oil prices are going up, when there's low supply of vegetable oil and wheat and all these things, then what happens usually is the high growth shares and ETFs start losing value significantly higher, and the ones that assure people of some beneficial gain over and above the capital gains. So high dividend ETFs and shares are the ones that gain value during this time. This is because people want some form of security in a form of a dividend income that is certain for a period of time. So at this time, high dividend ETFs are the ones that are growing in value. So what do I do as George? I usually sell my high growth dividend ETFs and shares. Then I buy my growth ETFs, which have lost a lot of value. So when again the market sentiment goes up, when things are doing well, the growth ETF goes up. And when it starts going up, the high dividend ETF sort of plateaus. This is because people are more optimistic and are more have a more risk appetite for their portfolio. So they start buying growth ETFs, the value goes up, and they start offloading the less risky and low growth potential ETFs and shares. And this is the point where they start selling those high dividend ETFs, and so the value goes down. And at that time is when me as George, I buy that ETF. So Normally, my policy is when people are greedy, I become fearful. When people are fearful, I become greedy. So I do contrary to what most people would do. When most people are buying is when I'm selling. When most people are selling is when I'm buying. When most people are buying is when I am selling. So I am always going against the grain and ensuring that I make again on my portfolio as I continuously have a mix potential growth in my portfolio. So when you look at my portfolio, and I'm going to share it now, you will find many shares and ETFs that are across many regions, many companies, many locations around the world. This is because economic impact faces different shares and ETFs in different ways. So I want to always have a balance in my portfolio, not having one ETF, not having one share that is going to struggle at different times, but having a mix match so that your average is always on a positive. So that is what I do when there's a market crash. I hope that you are learning, you are growing, and they're becoming better in your financial affairs. Remember to subscribe to the channel, to like this video, and to keep tuned for more and more videos. Thank you and enjoy your day.